Ladies and gentlemen, good day and welcome to the Q3 FY23 earnings conference call of Anupam Rasayan India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Thakur. Thank you, and over to you, sir.
Thank you, Rutuja. Hello and good evening, everyone. I'm pleased to welcome you all to Anupam Rasayan's earnings call to discuss Q3 FY23 results. Please note, a copy of all our disclosures are available on the investor section of our website as well as on the stock exchanges. Anything said on this call which reflects our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risk that the company faces. Today, from the management side, we have with us Dr. Kiran Patel, Chairman, Mr. Anand Desai, Managing Director, Mr. Amit Khurana, CFO, Mr. Vishal Thakkar, Deputy CFO. Now I hand over the call to Dr. Kiran Patel for his opening remarks. Over to you, sir.
Thank you and welcome everyone to the Q3 FY23 earnings call. Wishing you all a happy, healthy and a prosperous new year. As we step into 2023, the macroeconomic environment remains fairly uncertain with clouds of recession threatening the global market. There is also hope and some debate for a path to a soft.
Ladies and gentlemen, sorry to interrupt. The line of the management got disconnected. Ladies and gentlemen, thank you for patiently holding the line. The management line is reconnected. Thank you, and over to you, sir. Mr. Patel, you may please.
My apologies for the communication challenges. As I was mentioning, the economy is in turbulence and the elevated inflation, continued war in Ukraine, coupled with a high risk for leading economies entering into recession. Add to this the COVID situation in China. All of these factors make the overall economic.
Ladies and gentlemen, the line of Dr. Kiran Patel got disconnected. Please stay connected while we reconnect. Ladies and gentlemen, thank you for patiently holding. The line of Dr. Patel is connected. Thank you, and over to you, sir.
Hello. Can you hear me now?
Mr. Patel, please proceed. Your line is unmuted.
Okay. Please accept my apologies, but I'll continue. Despite the global challenges, I am very pleased to report that Anupam's product portfolio is performing very well. We have positioned our portfolio
Participants, we will request you to please stay connected while Dr. Patel. Ladies and gentlemen, thank you for the patience. The line of Dr. Patel is reconnected. Thank you, and over to you, sir.
Okay. Anand, if I get disconnected one more time, I will let you take over. But I wanted to let our audience know that Anupam customer base in
I now request Mr. Anand Desai to please take over.
Yeah, thank you, Dr. Patel, and sorry and apologies to the audience for Dr. Patel's problems in his communication. We get that. Hello and good evening, everyone. Welcome to our Q3 FY23 earnings call. I would like to wish you a very happy new year, and I hope that the new calendar year brings with it better opportunities for all of us. Before I discuss the business performance for the quarter, I would like to highlight that after the fire at our Unit 6 in Sachin, we have been able to get revocation of the closure orders and approval to restart the plant from the regulatory authority. Now coming to business updates. During the quarter, our growth was lower than usual, primarily due to the down of one of our plants. If we adjust for the same, then our growth would have been around 20% during the quarter. Since the plant has restarted, I'm confident that we'll witness robust growth in our sales for FY23. I will let Amit Bhai and Vishal Bhai take you through, discuss the financials in detail in their opening remarks. As we continue to grow and consolidate our position, expansion of our management bandwidth would be a key to this process. I am delighted to inform you that we continue to expand our business development team, and we have added 11 people with huge experience in the past by way of working in different MNCs across our key geographies and target companies. We continue to build a strong business with our existing customers by gaining wallet share, and with a new team in place, I am confident that this will help us serve our customers, both existing and new, in a much better way and further expand the client base. Our total products tally has now reached 250, with commercialization of one more product under LOI during the quarter. Till now, we have commercialized total of 4 core products under LOIs and contracts, and we will commercialize the remaining products in the coming quarters. Now coming to the pipeline for the products, we have a strong pipeline of products to be commercialized during Q4. We are further planning to launch 5 products in Q4, and majority of them will be in the fluorination chemistry. Before I conclude, I would like to highlight that customer interactions remain very encouraging. We have specifically seen strong interest from various customers on the fluorination side. We continue to work with the customers and expect more conclusion of LOIs for new products and conversion of LOIs into contracts in the coming quarters, which would further increase our revenue visibility for the coming years. Finally, to conclude, We see strong growth in coming quarters and years on the back of a robust pipeline of products to be launched. We shall have planned at Unit 6 during the quarter and expansion in capacity to cater to this demand. With that, I would like to hand over the floor to our CFO. Over to you, Amit Bhai.
Thank you, Anand sir. Good evening, everyone. As Anand sir mentioned, our capex is going on as per plan. In last 9 months, we have invested over 100 crores in various capex projects, including brownfield expansions, R&D facility, and solar project. We expect this brownfield expansion projects to be completed as per the planned schedule. This would provide enough capacity for the growth in next 3 to 4 years. On the working capital side during the quarter, we generated cash flow from operations of around 57 crores, which is higher than the PAT for the quarter. We have been highlighting this that we will be in a good position to generate strong cash flow as we bring down our working capital requirements. Therefore, I remain confident that we will generate strong cash flow from operations in the coming financial year. With this, I hand over the floor to our Deputy CFO, Vishal Bhai, who will take you through the financials.
Thank you, Amit Bhai. Hello and Happy New Year to everyone. Thank you for joining us here today. I would like to briefly touch upon key performance highlights for the quarter and 9 months ended 31st December 2022, and then we'll open the floor for question and answers. Before I proceed, I hope you all have had the chance to go through the detailed presentation submitted to the exchanges and uploaded on our website. Kindly note, our numbers for the quarter and 9 months are consolidated basis, also include 10 fact numbers. I will first start the standalone financials for the quarter ended December 30th, 2022. Despite unavailability of one of our plants, our operating revenues for Q3 FY23 was at 2,862 million rupees as compared to 2,662 million rupees in Q3 FY22, up 7.5% driven by volume and price growth. EBITDA including other revenue was at 850 million rupees in Q3 FY23 as compared to 803 million rupees in Q3 FY22. Growth of 6% YOY, this would translate into an EBITDA margins of 29% for the quarter. Profit after tax was at 386 million rupees in Q3 FY23 as compared to 379 million rupees in Q3 FY22. On consolidated basis, operating revenue for Q3 FY23 was at 3,827 million rupees as compared to 2,662 million rupees in Q3 FY22, up 44% YOY. EBITDA including other revenue was at 1,080 million rupees in Q3 FY23 as compared to 800 million rupees in Q3 FY22. Growth of 35% YOY. This would translate into 28% EBITDA margin for this quarter. The lower EBITDA margins were because low EBITDA margin of 10 pack industry compared to Anupam's margin. Profit after tax was at 544 million rupees in Q3 FY23 as compared to 379 million rupees in Q3 FY22, a growth of 44% YOY. Please note, consolidated numbers for Q3 FY22 does not include 10 pack industries number. Moving on to segment-wise performance for the Q3 FY23, our life sciences segment contributed around 231 crores rupees, while other specialty chemicals contributed to rupees 52 crores. In percentage terms, life sciences segment contributed 82% of the total revenue, and the balance came from the other specialty chemicals. As far as revenue breakup is concerned in terms of geography, in Q3 FY23, the contribution from Europe was 30%, India 38%, Japan 15%, Singapore 15%, and the remaining 3% came from China. Exports for the quarter was around 62% and continues to be a major contributor to the revenue. Our top 10 customers contributed to 91% of the total revenue, and there are 24 products that we provide to them. As mentioned in our previous call, we plan to moderate the contribution going forward, and as we introduce the more and more products, this concentration is going to expand and go further. With that being said, we will open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of S. Ramesh from Nirmal Bang Securities Private Limited. Please go ahead.
Thank you and good evening. So, let me start with what Anand bhai mentioned in terms of the new products, the emphasis on fluorination chemistry. So if you can indicate to what extent it will help you in terms of the growth in revenue over the next 2 years, and what will be the impact on EBITDA margins, that will be useful.
So, Ramesh bhai, I would like to just add a brief note first, and then on the specifics, Vishal bhai can take the question. On the brief note on the fluorination side, all these products, as we've been mentioning in the past, we have been working on them since last 3-4 years. The customers had asked us about our supply chain as to how we will be building on the supply chain, and they would have asked us, they had asked us that they would go forward onto these products only once we were clear with the supply chain. Once the contract was in hand, the customers changed and came back to us that yes, we can start the business now. And so that is how all these products are falling in place now. We understand that there is a time lag to introducing these products, but we have been working on these products since last 3-4 years. It is only that the customers had asked us to start the business only once the contract acquisition was in place, which is there now, and that is how this business was started. I would now ask Vishal bhai to take this, go ahead on the remaining part of the question of Ramesh bhai. Vishal bhai, please.
Thank you, Anand bhai. Mr. Ramesh, what we had mentioned earlier also, and based on the consulting firm's feedback as well, but from the pipeline that we have been building up and what Anand bhai has mentioned, we are looking at a revenue of $220 to $260 million over next 3 to 5 years. And we see that revenue starting to build up in next 1 to 2 years and growing further. We also, as we had mentioned earlier also, today also, 12 to 15% of our revenue comes from fluorination chemistry. And as we go, we will keep on introducing these products, which will only contribute to these numbers. Coming to the margin side, typically these are all high-value products, as Anand bhai had also mentioned, and this should have a higher EBITDA margin. However, for the sake of caution, we would tend to guide that our EBITDA margin shall continue in the similar range that we have seen in the past. I hope that clarifies, Mr. Ramesh.
So, to get some more light on this, in fourth quarter, will we see it adding materially to your revenue compared to, say, the year ago level? And if you look at FY24 and 25, if you can just indicate, out of this $220 to $250 million over 5 years, how much of that do you expect in the next 1-2 years? Will it be equally spread? Will it take time? So that would be very useful in terms of, making the estimates from this business over the next 2 years.
Sure. So Mr. Ramesh, as we had also mentioned that, and what Anand bhai has also initially indicated as well, that, these takes time to commercialize, and B, once it is commercialized, it will have its own growth curve to go to the potential. So that's how one should see it. So if you see in the early part, we will have a limited contribution, and as we go further, the contribution shall start increasing significantly, and that's what we can guide for now. At later stage, we can get more specific in terms of numbers, but today we will say that this is how one would want to see this. And
just to clarify, the products which Anand bhai mentioned in fluorination commercialized.
Sorry, I missed your question.
The products which Anand bhai mentioned will be launched in quarter based on fluorination chemistry. There is commercialization, an agreement between you and the customer to develop them.
I'm sorry to interrupt you, Mr. Ramesh, but your voice is breaking, sir. We are unable to
Just
hear
hold
you.
on. Just Can you hear me now?
Yes,
Hello?
please go ahead.
Yeah. So just to clarify, the number of products which Anand bhai mentioned you are going to start from fourth quarter, are they just agreements with your customers or are they already commercialized? This is there's a lead time for commercialization. I was just wondering.
No, so as what Anand is saying, when we say commercialize, which means that it will be there we'll be selling them to them. The question is, it will take its time to come into the volumes that we really like ourselves to be, but the numbers will start coming in from these quarters as well, right?
Okay. They are commercial, but the ramp up will take time. I understand. Just can
Exactly,
I squeeze in
that's
one more question now? In terms of capex, what is our view for the full year this year, and what is the plan for FY24?
So on capex next year, we are looking at around about 300 crores of capex that we would be deploying for the next year, and that's a number. And year after, we should be looking at around another 250 odd crores, so that we are able to deploy full capex that we had planned and declared in the next 18 to 24 months.
Okay. So finally, can you give us some guidance on how you expect the TANFAC operations and investments for capex there, because you're obviously going to have supply chain linkages with TANFAC and also adding to your consolidated revenue. So if it's possible, if you can give us some thoughts on TANFAC reuse.
So TANFAC is a separately listed company. However, let me give you just a bit of a perspective from our side. TANFAC will have its own growth journey. They've done a good quarter this quarter, and we believe that they should be doing a good set of numbers over the next few years as well. They will deploy their own capital and do capex. We are working with from Anupam. We are providing them with technical expertise as well as marketing expertise and product knowledge to help them commercialize products faster and well. However, they will have their journey with their own balance sheet financing, and we would be using them for our supply chain, and that's where it would be synergizing with each of us.
Okay, thank you very much. I'll join the queue. Wish you all the best. Thank you.
Thank you, Ramesh.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Just continuing with the new product launches, the initial comment suggested 5 odd products largely for the fluorination business there. The ramp up, while there will be a gradual improvement there, from a product approval stance, one, how many more products should one expect here apart from the 5 that we are planning in this quarter in Q4? And second, what time frame should we consider in terms of a visible delta in terms of our revenue growth?
Anand, would you want to take it or shall I take it?
No, Vishal, you go ahead.
Okay. So if we have around 14 products that are under pipeline, and that's what we are looking at commercial, launching it in next 12 to 18 months, of which what Anand has mentioned that 3 to 5 year looking at it in this quarter itself, next quarter itself, so which is Q4, and we believe that we should be able to launch 6 to 8 molecules every year from then on for next.
Sure. And from a product approvals perspective, any timelines that you are looking at? Because it will be catering to different industries as well, right? Agro or new industries.
Yeah. So when we are saying commercializing, Ankur, we are also looking at. So we have accounted for the approvals and the validation from the customers as well, and this timeline is inclusive of those permissions and validations from the customer as well.
Okay, great. And your revenue guidance of 25% plus, does that include the benefit of these products as well, or these products are top up and the core business will grow at 25?
No. So for us, fluorination is also core business, and Ankur, as you rightly identified, we would be looking at it on Anupam standalone basis, we are looking at this numbers. 10.5 shall be over and above that, but Anupam standalone will be this guidance that we are saying.
Sure, fair enough. And just lastly, from a working capital perspective, will this business be very different from the current business? And your thoughts there from an improvement perspective.
On the working capital side, see, we would love to have a business which is more a stable business, which is where the business model will try to keep it same. However, we believe that the working capital shall be more efficient than what it is today. And for our core business also, we will be looking at a downward trajectory as we have been seeing it. And also for these products also, we will have a more favorable working capital system process, working capital cycle.
Okay, fair enough. That's it from my side. Thank you.
Thank you, Uncle.
Thank you. The next question is from the line of Saurabh Kapadia from Sundaram Mutual Fund. Please go ahead.
Yeah, thanks for the opportunity. So, in your presentation, you have mentioned about you signed 2 contracts with leading European companies in Q3. If you can provide some detail in terms of value and timelines.
Thanks, Saurabh, for this. So, Saurabh, this is not a very large contract in terms of revenue. If you were to look at it, there will be around 100 crores of revenue that we will look over next 4 to 5 years. However, what this was more important and why we have highlighted this in the presentation as well is that this is a product which these are the products where our customers really wanted it fast, and they were wanting to move out of Europe, and this is where this is a product which is coming straight out of Europe to our portfolio, and we could do it in a very short time period, and that's where we were enthused that the Europe Plus One strategy is now coming. Europe Plus One movement or strategy or whatever we want to call it as, that has now started playing out, and our ability to respond with that agility to serve our client was something which was a testament in this contract, and that's where we just wanted to share this with our stakeholders.
So, is it with one of our existing clients?
Yes, it is with one of our existing clients. Yes, you are right.
Okay. So, talking about the overall working capital, you mentioned it will see a downward trajectory. But in an earlier call, you mentioned that maybe by and inventory cycle, if you look at it, it will come down to FY21 level. So, should we expect by end of Q4 that should be the way ahead?
Yeah, so we were fairly we've seen that trajectory well. We see that it should be in the range of 230 to 40 kind of numbers, that days in terms of days that we have been tracking. And one more indicator that I can share with you is that for the 9 months we have been able to generate an operating cash flow of 155 crores, and in this quarter itself we have done a 57 crores of operating cash flow, which is significantly higher than the profit after tax as well. So this itself is also giving us a bit of a clear indication on where our working capital is moving.
Okay. And so the last one on the gross margin and the other expense. So if you look at gross margin have come off slightly compared to last quarter, while if you look at other expense that are also reduced. So any specific reason for this?
So I think the way we see our business and way we try and model our business is that if you, as we mentioned as well, that we tend to work with our customers based on at PBT levels or at for us really looking at is EBITDA levels, because that's where the thing is, because there are a few products where the cost of goods sold is less and the overheads are higher, whereas in few products there are cost of goods sold is high and the overheads are low. However, at PBT level is where EBITDA level is where we would really discuss and negotiate with our customers, and that's the number that remains consistent. And just one thing on the right, so that's where we would tend to be there. So I would look at it from that, and depending on the product portfolio, you would see that the number of gross margin and the overheads would vary from a quarter to quarter.
Okay. Was there any one-off cost due to fire?
No, because we are fully insured, so that to that extent, there is no cost there.
Okay. Thank you. All the best.
Great. Thank you.
Thank you. The next question is from the line of Rohit Nagaraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity and good afternoon, sir. So first question is, during the 9 months, what would be the revenue contribution from the LOIs that we signed during FY22? So as I understand, we signed close to about 2,600 crores of LOIs with a 4 to 5 year tenure. So what will be the contribution during 9 months?
LOIs and contracts this 9 months should be around 75 to 80 crores in this 9 months. And as we go next year, we should be able to ramp it up to at least 200 plus. And next year onward, post that, so FY25, we should be able to have a full value that of the contracts that we would have expected from them. So which is basically 475 odd crores coming from this LOIs and contracts.
Right, got it. And excluding the LOIs and contracts, so for our legacy plant or legacy business, what is the kind of growth rate that we expect? I mean, these will be additional that will be coming in. Apart from this, obviously, we'll be adding the fluorination products from Q4, so revenues from that also will be ramped up. So on the legacy business, what is the growth rate that we target? Based on the, I think we have also done some debottlenecking based on those assumptions.
So the way to look at it is these are all my product portfolio and my business. So if I were to slice it into two and say my legacy business and new business, because every year our growth will be driven by 2 or 3 different factors. One is my existing portfolio giving me a volume and a price escalation. 2 is coming from the newer products that we introduce, and also the newer chemistry that we introduce. But if you look at it, that's where we would suggest, and our numbers would historic will be in terms of total growth is where we should be looking at across all the 3 ones. If we try and slice it out, it may not be accurate because there are products which are launched last year and last quarter, and they will have their own ramp up. So that will be really challenging. But if I were to give you a guidance as we have been giving, we should be able to do a 25+% growth rate over the next year, and you can take those numbers for the future as well.
Right. I think.
I hope I'm helpful enough.
Yes. That's really helpful. I was just going to come on that question in terms of guidance. Just one number which I missed. FY23, what would be the capex? I think you said FY24 will be 300 and year after that 250. And we've done 100 crores during the 9 months.
Okay. It will be around 170 odd crores, 175 crores kind of a number in terms of capex.
Right. And just one. Right. Just one clarification for the next couple of years for the capex, given that our CFO is increasing, do we need any additional debt to fund it?
No. We are fully funded. In fact, I will be generating more cash out of my business because if you look at it, I'm fairly funded on the day one. We will need no debt to grow. Do the capex that we have budgeted for now.
Sure. That's all from my side. Thank you so much and best of luck.
Thank you. Thank you.
Thank you. The next question is from the line of Vidit Shah from IIFL Securities. Please go ahead.
Hi, thanks for taking my question. My first question was on the working capital front. Just if you could give us a status update on the negotiations that were happening with customers to make billing biannually, semi-annually. Sorry. How have they gone? How many, what percentage of revenue generating customers have agreed to this, and how many have pushed back on it?
So as we say, I can say that around 60 odd percent or little higher than that of our contractor revenue, we've been able to move that. Others, we are working with them, and as you know, these are all large corporates with their own internal systems and processes, and so many years of their dealings. It will have its own time, but we are moving ahead. And if you see, the kind of the operating cash flow that you are seeing, this is also a reflection of one of this as well.
Okay, so 60% of revenue has been moved to 6 months billing, and the rest is being negotiated. Is that the way to look at it?
Yeah, 60% of contracted revenue. Yeah, you are right.
Okay. Got it. And on the revenue front, we lost roughly 45 crores of revenue due to unavailability of capacities. I believe one unit has restarted, one is still pending. So, when do you expect that unit to be back and running, and how much loss could we anticipate in 4Q?
Just adding, I believe that we should be able to start the other unit also soon. We do not see any significant loss of revenue come because of unavailability of these plants. Maybe if at all, if it will be 5 to 10 crores at max, maybe. But I'm not wanting to guide on that number for now. Let's just wait for a little bit time before we can guide on that. But we don't see a significant one. We are hopeful to get the permission soon.
Okay, got it. And just one last question on the capex schedule. The fluorination capex of 420 crores. Any specific dates when parts of this would be commissioned? 18 to 24 months, I think you said. But when and how much would be commissioned? If you could just dwell more into detail into the schedule of commissioning of that.
So we are looking at commercial, starting one plant maybe by March 24. But just give us, it's little out, right? So we have a plan, but probably a quarter more, and we will be able to give you a better visibility as well. Today the plan looks like that in this time frame. But please don't hold us with this dates till at least one more quarter, and then we can be more firmer on that. I hope that's fair and fine.
No, that's fine. Thanks so much for answering this.
Thank you. The next question is from the line of Siddharth Gadekar from Equirus. Please go ahead.
Hello.
Please
Hello.
go ahead, sir, with your question.
Yeah. So you just spoke about one opportunity from a European customer coming to us because of the energy crisis and other issues. So is it fair to assume that this order might be sticky in nature, and the customer will not restart the plants once the energy crisis normalizes in Europe, or how should we look at that revenues?
And would you want to take it, or shall I continue with this?
Please continue.
Okay. See, if you really look at it, whenever two things. Let me make a statement that our understanding is that the energy prices, new normals for the energy in Europe will be different than the old normals of energy in the Europe, and that I think that we believe that should play out. However, having said that, I would also say that typically what we have seen historically and also is that once the product moves out of Europe to a country like India or China, it doesn't go back. Because these are not like somebody saying, I have a trouble for 6 months, please do work for me, and then they take it back. These are more long-term in nature. They are more strategic in nature, and that flow happens. If you see this flow, it was not as if that products were not moving from Europe to China and India or China and India. However, what happens with these kind of events happening, there is a accentuation or the hastening of that process that happens. And the products move earlier in the life cycle than the later in the life cycle, and that's what we have been seeing, and that's what we were also trying to mention by that LOI that we mentioned, and that's the process, that's the drive, or that's a trend that we are trying to just say that there is some bit of a green shoots or validation of that trend that we anticipated, and that's what we are saying. So to answer your question. We believe and we have a reasonable comfort that the product that comes here doesn't go far, because we will not take products which are for 6 months or 12 months. We would take products which are for 5 years, 3, 5, 7 years and lifetime.
So got it. So secondly, you also spoke about some more commercializations coming in the fourth quarter in the next year. Now, are these some new opportunities, or these are also something that is moving out from Europe? How should one look at these kind of opportunities?
So see, if you see, we always have a pipeline, and if you see, we have a product pipeline of 90 products that we have mentioned in our presentation as well. And these are the pipeline products which gets mature over a period of time. And as we had said in the historical conversations as well, that 6 to 8 is the kind of a number that we see we will be able to commercialize. And that's these products are the result of the effort of this product pipeline.
No, so I was just getting if we are looking from a Europe plus one opportunity, are we seeing any incremental traction because of that? Or these are the regular businesses which is coming in now incrementally?
No. So you're right. So that we are seeing in two different facets. If you were to see Europe plus one, if you were saying, and if you want to talk about that, one is that the new inquiries of newer products is coming in more and more, and our pipeline is getting more and more wider and more fuller in that sense. And but however, that takes 6, 9, 12, 18, 24 months to really get into a commercialization path. Right. Second thing, what happens is that what we were talking to them earlier and what they were looking at in, let's say, launching into doing a transfer in 24 or 25 has moved to 24 or 20, which is so the period has got little pulled up is the one, and two is they have also come and improved the volume projection that they had given. So like in few contracts we have seen that the committed volumes have gone up. So there are two level of positives that we can see here.
Okay, so got it. And in terms of
Mr. Gadekar, may we request to please rejoin the queue? We have 5
Yeah, sure.
Okay. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address from all participants, please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Ratish Warrior from Sundaram Mutual Fund. Please go ahead.
Yeah, thanks for the opportunity. Hi, management. Just I had one question. Am I audible?
Yes, you are. Please go ahead.
Yeah. Just had one question with respect to working capital. I think there have been earlier a couple of questions, but just to get some clarity, a couple of calls back, we had mentioned that, if I'm not wrong, we had mentioned that, because of various global supply chain issues, etc., we are holding on to higher inventory as per the customer requirement. And second, I think earlier participant, one of the questions you had answered now that 6 months contracts were moved upwards of 50%, more than 50%. So I'm just trying to understand, where do we see our working capital, settling over the next 2-3 quarters or next year, and all this 60% of coming in 6 months, how should we look at it from the working capital perspective, number one? And second, regarding the earlier question of, this normalization of inventory, how much of that would have got normalized and how much more do you expect? Just can you give us some thoughts on this? Thanks.
Sure. On the inventory side, if you look at it, the numbers, as we have mentioned, that these numbers are dropping and which will continue. The number of days for the inventory will continue to drop. The number is guided for the full year is around 230 to 40 kind of a number, and as we enter the next year, we will see that trajectory continuing, and we should be looking at numbers going further down and around 200 and below over a period of next 3 to 6 quarters. 3 to 5 quarters.
So the 6 months when we are saying, how it is impacting our working capital? Again, just give us.
So what happens is a big. Yeah. So because we do 6 months, see, when we do an annual pricing, then you need to stock up accordingly, right? Because you have a one fixed price and you don't typically get the one fixed price from our suppliers, and even if they give you, they are for a month or 2 or 3. So we need to hold inventory in that sense. But the moment you go to 6 months, that requirement of the inventory holding to hedge the price reduces to that extent, and that further translates into a lesser working capital intensity in terms of inventory.
So because of this, sorry, one clarification again on this. So because of this 6 months, how much would have our inventory days or working capital reduced? Because now I think, see, as you mentioned, 60% is moved towards 6 months, right? So compared to last year, now what would have been that benefit? Thanks.
So, see, I would not want to put, because there are very different. So there are multiple factors playing out. One is your cost of the inventory dropping down. Two is your the 6 months pricing 6 months pricing structure, and three is also the inventory is dropping because of the pure cost of inventory dropping as well, or price of the inventory dropping as well. So I'm not able to put one point on finger and say this is the exact number because of this. However, in total, as we said, we have been able to reduce it, what we mentioned in the last quarter as well, and we believe that the total number will come down to this level, what we have said. So apologies if I'm not able to give you an absolute number, but that would be little difficult to answer that today.
Thank you.
Thank you. The next question is from the line of Pankaj from Affluent Assets. Please go ahead.
Thanks for taking my question. Sir, in answer to one of the participants, you mentioned that the total opportunity, the order book for your fluorination business would be around $200 to $220 million. I suppose this would be over a period of time, 4 or 5 years, cumulative. So just wanted to understand, is this would this business repeating again, or it will be one-time business? Second question is, we have a pipeline of 6 to 8 molecules launched every year, as you mentioned. So, and currently we are having margins of around 28-30%. So how sustainable are these margins in wake of these launches? And third question is, given that top 10 customers of ours contribute around 91% of our revenues, what are we doing to rationalize this? Thanks.
Okay. So first is when we mentioned that it is $220 to $240 million, we are talking about an annual revenue that we are talking about. That is the first thing, and so that we believe that number continues, because if you see historically, the product that we sell today, we continue to sell it for a longer term and longer tenure. So that's the first answer to the question. Second, I missed your question. Can you please repeat the second question, please?
Well, one of the question was, our top 10 customers contribute 91% of the revenues. What do we do to rationalize this, rather than reduce this dependency?
Okay, so see, if you look at this trajectory has been there. If you see, we earlier 5 to 7, 8 years back, our 2 customers used to contribute 80 to 90% of our revenue. Today, that is 10 customers. And in terms of products, if you look at it, there are 24 products servicing these clients to contribute to 80 to 90% of revenue. If you look at it, and that's one. And as we continue to introduce more and more products, and also cater to more and more customers, as we have mentioned, and as what Anandbhai also said in his opening statement, that number will continuously drop further. But just to give you one context, that if you look at from an agrochemical side, the top 5 agrochem players would contribute 70 to 80% of the revenue, of the 70% of the market. And to that extent, there is so much that you can diversify beyond a point on in the industry which is structured in this manner.
Okay, so you mentioned that.
Having said that, we continue to expand our product customer base also. If you look at it today, we have 27 MNC customers with over 70 customers. Today we have around 50 products. So as we expand the number of customers and number of products, that diversification shall continue to happen.
Okay. So you mentioned that $200 to $220 million of revenues from fluorination is annual number. So this, I suppose, would be maybe 5 years down the line. So do you mean to say 5 years down the line, fluorination business would be as big as what our business currently is? And one of the question I also mentioned is that since we are launching 6 to 8 molecules every year, how sustainable are our margins to the tune of 28-30%?
So first, yes, the answer to your first question on fluorination, yes, fluorination will be a sizable business for us. So that's something which I agree with you. As we launch new products, that continues. However, if you see historically also, we've been introducing multiple number of products, and we have been able to maintain the margin. We believe that we will be able to hold that margin, and the way we do our business, where we have a lot of value addition, we do complex chemistry with multiple steps in terms of processes, which will lead to a margin which will let us have the margins that we have been asking to our customers. And that's our model, where we do a transparent cost plus model, where we expect this kind of a margin, and that's how we do our business. So we don't see that number changing anything significantly from here on.
So our products or launches are mainly specialized chemicals, not commodity, right?
Yes.
Okay, thank you, sir.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Securities. Please go ahead.
Good morning. Thank you very much for the follow-up. One of the thoughts I had when I compared the second quarter with third quarter, your sales revenue has declined more than the decline in the cost of goods sold, including the change in inventory. So the sales has declined by 28 odd crores. The cost of goods sold has declined by 10 crores. So is there a lag in the kind of pricing you're taking, or is it that some of the products are enjoying lower margins in this quarter? How do you explain this on a sequential basis, on a quarter-on-quarter basis?
Yeah, so it's Ramesh, it is more to do with product mix, because what's the total product, what are the products which we have sold, as I was mentioning earlier also, that as the product mix changes, there are a few products which have a higher gross margin versus higher gross margin and lower overheads versus lower gross margin and higher overheads. So it's all to do with the product mix that is there. Nothing really has been changed in terms of ability to pass the prices. Otherwise, and then that's where if you look at from an EBITDA point of view, our EBITDA percentages will be similar to what we have in Q2 as well. Right?
Okay, so let me take this discussion further. In the context of this global slowdown, recession, and the commodity deflation, we are seeing prices across chemicals falling. Should we assume that in your contracting business, you are not likely to see any inventory losses, or the cost of high cost inventory, hurting margins, say maybe for 1 or 2 quarters, and you will, if you are able to, ramp up your volumes and higher margins, that should translate into higher margins? Is that the way to understand? Because in chemicals, typically when you have 1 or 2 quarters of prices coming down, there is a high cost inventory which hurts your margin. So is that risk less because of your structure in terms of your reliance on the contracting business?
Yes, you are right. That's the case, because my customers know what quantity I bought for them and at what price I bought for them. So that is passed through, and that does not lead to any impact or any inventory write downs or write ups for us.
Okay, thank you very much.
Thank you.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the follow-up. So just one question in terms of guidance. So in 9 months, we have done top-line growth of about 21%. And earlier, the last quarter, we were guiding close to about 30% plus. So what is the guidance for FY23? And I think for FY24, you had mentioned 25% plus guidance. So just wanted to have what would be the base for FY23?
So FY23, see, I don't want to hazard I don't want to really guide an exact number, because that would not be a very ideal way of saying that. But if you see that number of 21, we should be able to go at least 300 to 400 bits more than this number for an annual basis.
Right. And just one more clarification again on the sequential basis. There is the interest has absolute interest cost has reduced by a couple of crores. So is it because of the working capital coming down, and would this be a run rate which we can take it forward?
So yeah, you're right. That is an efficiency in the working capital that has reflected in the interest cost. And as we improve that, this should improve as well. But just mind you that we are also doing capital deployment and also growing. But right now, that number should look at in this range.
Sure. Thank you so much, and best of luck, sir.
Thank you. Thank you, Rohit.
Thank you. The next question is from the line of Siddharth Gadekar from Equirus. Please go ahead.
Oh, hi. So one more question in terms of the demand. Are we witnessing any demand slowdowns in our existing orders or any indications? Because we have heard a lot of people talking about high inventory built up across the channel. So any sense on that?
So as we had mentioned in last question as well, or the few questions back, that right now we are not seeing any revising the demand outlook from our customers. And as we said also, the business model is such that we will have a long-term visibility of these volumes. And second, if you really look at it, for us at least, we have seen that the net effect of a Europe situation has been beneficial for us. As I also mentioned that on the few of the contracts when we revised, we got a higher volume, minimum volume guarantees on this. So they have upped it, and that's something that and we are witnessing for now. So for now, I would not say that we have any down revisions or any cautionary indications that we have got from our customers.
So, and have we received indicative volumes for FY24, or that is still pending?
So as I said, right, that we have a visibility. The contracts are there with this, and the volume is practically there, and it's about the price that we revise every 6 months and 12 months, as the case may be.
So in terms of volumes, we don't see any major issues going ahead also, at least for the next 3 to 4 quarters. Would that be a fair understanding?
That's a fair assessment. That's a fair assessment.
Okay, sir, got it. Thank you so much.
Great. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. We apologize to the participants who did not get the chance to ask questions due to time limit. I now hand the conference over to the management for closing comments.
Yeah. Thank you everyone for your questions. We hope we have been able to answer most of your queries. If you missed out on any questions or queries, kindly reach out to us through our IR advisors, EY, and we'll be happy to get back to you on an offline basis. Hope you have a good weekend. Look forward to your continued support in our growth journey. Thank you.
Thank you. On behalf of Anupam Rasayan India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.